Mr. Schneider, thank you so much for being with Bloomberg TV. Your 2016 organic growth was at 3.2%, a bit below our estimates, and you're targeting between 2 and 4% for 2017. So are you just revamping the long-term guidance of Nestle?
Our 2016 organic growth, while it was at the high end of our industry, it was a bit below our expectations, especially in the second half. What we did see fairly widespread across the board is a reduction in volume growth in the second half. I think that was a general trend in the industry that was not just specific to us. In addition to that, pricing did not quite kick in as fast as we would have hoped. Hence, as you said, slightly below our own expectations and the market's expectations. Having said that, for 2017, it's kind of a balanced view. There's some hope that pricing will be more favorable. On the other hand, we're also facing a whole lot of macro uncertainty. The 2 to 4% organic growth guidance, when you look at the midpoint, that's exactly the run rate that we have seen now for the last 3 quarters. And so I think that gives us cushion on both sides. I think generally in this somewhat volatile and also still somewhat deflationary environment, we're better served with straightforward annual growth and earnings guidance, and this is what we gave you now for 2017.
So is the long-term guidance of 5 to 6% organic growth model of Nestle over?
What we have said is that our focus on organic growth will remain, and we do believe with some good internal initiatives that we can achieve organic growth in the mid-single-digit range by 2020. So that's basically what we're attempting to do.
You're also targeting significant cost savings going ahead. Can you tell us where they will come from?
So this is building on some significant cost-saving effort that was already achieved in 2016. We'll continue that. We have reaffirmed our cost savings target of more than 200 basis points by the year 2020. This will be mainly from non-customer facing structural costs, so think about back office and administration, but also basically our plant network, which needs to be optimized.
Could that also include, for example, a disposal of some brands that are performing a bit not as well as others, such as the chocolate business?
Portfolio management in general is a different category. So first and foremost, we try to fix our businesses and get back to growth. We see ourselves as operating managers, not as traders. However, if something does not fit into the longer term strategy, if there's no hope of turning around organic growth and profitability, then yes, we have been no strangers to portfolio management in the past, and that'll continue.
So given the performance, the disappointing performance of the chocolate business in North America last year, does that mean that you're not excluding disposing of that unit?
At this point, we have no specific deals to announce.
In the U.S., it is your biggest market. Are you concerned about the new U.S. administration's protectionism policies?
I think one of our strongest advantages at Nestle is what I call the natural hedge, and that is in most markets, our top line and what we make locally are almost ideally balanced. The U.S. is no exception to that, and so, again, while generally, as a global company, we're no fan of anything that smells of protectionism, in this particular circumstance, we have no particular reason to be worried.
I believe that most of your brands in the U.S. are produced locally, but some still have to be imported, like Nespresso or San Pellegrino. Could a U.S. border tax impact those brands?
Some products are always imported, you're right, especially among the global brands. But again, when you look at the balance overall and the relationship of top line and what we make locally, I think we're really at the lower end of the worry list. I think there's some other industries that are significantly ahead of us.
In Europe, you had good internal growth, but pricing was negative. How do you see the outlook for deflation in Europe? Is it ending?
I think in particular in Western Europe, there was quite a bit of a deflationary sentiment towards the end of the year, and we hope that that's beginning to turn around. There's some general signs of that, but it's always very, very hard to turn that corner and to call that moment in time exactly, but there's certainly that hope for 17 and beyond.
A brand like Nespresso, for example, hasn't raised prices in Europe for years. Does Nespresso have pricing power?
I think Nespresso in particular is a wonderful system, certainly at the top end of the market when it comes to cartridge systems, top end of the market when it comes to coffee quality and variety. And so I think that's a business generally where consumers do appreciate what they're getting and they're willing to pay for it.
So will you be able to increase prices in Europe significantly this year if commodity prices pick up?
That is a general trend we're seeing, that I think slowly, ever so slowly, commodity prices are coming around. There were tailwind in some of the past years. They may not be a tailwind for 2017. Having said that, managing that situation starts with good and prudent forward-looking hedging, and we've done quite a lot of that. So the immediate cushion is certainly there, and that gives us more time and more patience to actually have a discussion with our trade partners and the consumers to make them understand that eventually there might be some selective price increases.
The UK was a challenging year in 2016. In 2017, are you going to adjust? After Brexit, we've seen the pound weaken. Are you going to be able to adjust prices?
The UK is certainly one of our historic and core markets. We're very committed to it and staying close to the British consumer. We believe going forward, where there are selective raw material price increases that justify a discussion with our trade partners, we will do that. But what you will not see from us is just a general across-the-board increase.
But will you be able to increase prices to adjust to the weakening of the pound specifically?
I don't think it's linked to the weakening of the pound. It is linked specifically to raw materials that are being used for some products. And again, some will be local, some will be imported. So that is a discussion we're engaging in at the right time.
In China, your second biggest market after the US, how do you see consumer demand going forward? Is it improving?
Consumer demand in the second half of 2016 was somewhat muted. Having said that, we see signs that that's turning around, and so that's encouraging, given, of course, that China has tremendous promise as a major future consumer market for us.
There's been turmoil in the baby infant formula market with changes in regulations, shifts in consumer habits. How is it affecting Nestle?
We are committed, of course, in this very, very sensitive baby formula market to top-notch quality, and we're very much supportive of regulation that ensures that there is consistent high quality in the market. From that perspective, we very much welcome the new regulations that will be coming in effective 2018. That means now in 2017, you may see some destocking effects of old products from some of our competitors, and so 2017 may be a bit choppy. But I think from 2018 onwards, it'll be smooth sailing, and quality ultimately will get rewarded, and we're committed to that.
So the short-term headwinds in China in 2017, you're expecting them to continue?
Short-term headwinds, when it comes to that specific product segment, again, we have a strong position. We're also having a lot of good things going for us. But yes, it'll be a year that's going to be hard to forecast.
Investors expect some radical change from you since you took over on January 1st. Is selling the 23% stake that Nestle still owns in L'Oréal part of your plans?
I think overall, when I look at outside media receptions, this whole notion of radical change was a little overplayed. I think this is a company that has been convincing its partners and investors with continuity, and I'm committed to continuity. In that regard, we patiently pursue our long-term strategies, and that will certainly not change under my leadership. Specifically, when it comes to L'Oréal, this is an investment that has given us wonderful returns. It's also, in my view, a highly strategic asset, and of course one that has a significant importance to the company, representing about 10% of our market cap in value, and hence anything we will do going forward, we will do very prudently.
Are there any discussions going on in case L'Oréal wants to buy back this stake?
No comment.
Finally, we saw Reckitt Benckiser acquiring Mead Johnson last week. So to enter the baby formula market and compete with Nestle, what's on your radar in terms of acquisitions? Are you on a hunt?
I think this company in the past has been quite active on the M&A front, if and when that was necessary to build our market positions. And personally, in my history, I've done a lot of M&A deals, so I think it's a good fit in that regard. But I think the common conclusion here in the company and with me personally is M&A is not a goal in and for itself. Specifically when it comes to the transaction you're describing, I think we enjoy a very strong market position in that space. It was not one where we had been competing in any way, shape, or form. So we see it basically as an ownership change in this industry, but it doesn't in any way, shape, or form affect our strategies.
Very quickly, would that be more in health and wellness, the fastest growing segments?
I think we have tremendous opportunity in health and wellness, but also in food and beverage, because in food and beverage, there's tremendous change underway with the consumer demanding ever better nutritional profiles. That opens up new opportunities, that opens up significant growth. And so I think both of these will be important to us going forward.